Right, we're live on YouTube. Welcome everyone. Coaches. Welcome everyone. Welcome to ADT's public broadcast of futures training and trading. My name is Doug. I'm one of the moderators here with ADT in the futures group. ADT is owned and operated by Chad Christian. He is the coach. He trains us on how to trade the market sideways, upwards, downwards, every way you think you can trade it. What we're looking at here today is futures, real quick legal. Anyone here at ADT is, we are not licensed financial tax or investment advisors. So everything we talk about here is for training purposes only. Do not try and copy trade or follow any of the trades that we may show you throughout the day or throughout the session. Today, we are only going to be going live for 1 hour today from 2 o'clock to 3 o'clock. I've got a little bit of something I need to take care of a little bit later on today, so that's what we're going to be doing today. Hour of futures training. So if you do have questions, please make sure that you type them into your chat boxes, like, share, and follow on all the socials. We appreciate your help. TikTok, for the folks over there, please tap that screen. Let's get the algo pumping. And if you did find us on your For You page, make sure you put hashtag FYP in the chat. That tells TikTok where you found us and helps push us out. Can everyone hear me okay out there? One. Sounds good. Appreciate it. All right, so today we were looking at a couple of different absolute runners on our futures group. We had a real quick question here on M2K where we had a member that was asking where might be a good entry point for this particular trade, this ticker. And what we determined is that there really is not a good entry point for any kind of scalp to the up or down side at this point in time, because we're in a wedge pattern. And until we break out of this pattern with decisive direction, we don't want to do with it. So the determination was that we needed to break and hold above the wedge or break and hold below the nearest low of the wedge. Don't know if you guys out on the socials can see that. I think that's just for our Zoom folks only. So the wedge is there for your convenience. So break and hold out of it for the top side, or break and hold below the consolidation zone or double bottom that I have marked there with a box and a line. Essentially, that is a strong resistive zone that we'd be watching for price action to find support in. Here, I want to go over to a trade that I've been running pretty much all day long. And this has been a phenomenal example of an EWO to the upside. Of my other goodies here. Get to that in a minute. There we go. Okay, so our EWO entry that I got in on this trade was there we go. So EWO entry over here at 10:18. So yes, I've been in this trade since 10:18. It's now going on 4 hours. What I did here on this entry, I took the entry with 5 contracts, and I was watching this key level, which this green line, which is here now previous day high. And we know that we rejected off a previous day high once with some gusto, struggled to get through it the second time. On the way back down, we also had a little bit of a struggle. And then as we came back around, I was expecting some level of rejection there. So for me, the entry here with my stop down below the 200 was a good entry. I was in with 5 contracts. I allowed it to come back and test the 21. I sat in a little bit of a drawdown situation for just a minute, again, I already knew what my risk was and I was prepared to lose it. I think the total risk on that $60. So my first 5 lot I was in for $60. And when it came down and quite literally bounced off of VWAP and I got this great buyer's wick response out of it, I was actually added into my position there because it was going to be going in my direction. So I had at that point a DCA position right around here, again with my stop loss below. So now my risk, I doubled my risk to 120, comfortable with that with my account. And once I got a good response out of that, and I got all the way up here to that green line again where the seller's wick was, I sold off 5. So I was in with a quick scalp on 5 contracts, left 5 running, and then ran the EWO as taught to run it. When we came up to, let's see, first zone there, this is a double top zone that I was looking at that we needed to break and hold out of. Well, when we came up in here and we just kind of milled around for a bit, I actually sold off 3 contracts and wanted to capture some profitability. Then I had 2 still running. Because it had sat in here for so long, even though it didn't break the 9, I wanted to capture a little bit, take some weight off of the trade. And between the 5 that I sold on the green line, which is previous day high, and the 3 there, the total 8 contracts, I think we did the math and it was $250 worth of profitability out of those 8 contracts, 2 running. My next shed point, I believe, was up here as we broke the 9 and challenged the 21. I sold off 1 contract there, and that got me another $73 or so, I think, in that particular trade. So right now we're about $330 to $350 captured value in that trade, and I've got 1 running from my original or my second buy-in position with my stop very comfortably below next low. So I could move this up, I could protect the trade, or I could protect profitability even more. But the thing that I'm most concerned with here is I don't want it to come around and get stopped out for any reason, because I do want to let this thing work. Now, what I was talking about there for the viewers at home was right there. I could move my stop up to that point if I wanted to. All right, Ralph, have a good night. But that is my strongest double bottom bounce area. So if price were to come back and bounce, it would likely be in that spot. Now, would I let the trade melt down to that point? We're getting late in the day. We're about 50 minutes away from power hour. So I'm still in this trade. You can see my sell stop there. Here's my buy position here. And the current trade that's running on that 1 micro contract is $138.70 on 1 micro contract. So looking at the overall profitability of this trade, if I just let this thing go, this could just keep going forever. We are still in open market conditions. I do have enough margin in my account to let this ride, right? Margin requirement for that would the intraday or the maintenance margin on that contract is $2,240. I've got that covered. Bobby, no, based on my account size, I will not trade minis until I'm probably anywhere between 15K and 20K. I've proven to myself and everyone here in our Zoom that trading micros is extremely lucrative. And today, overall, between scalps that I've done and this EWO that I've run, I'm over $1,500 in micros. If I were to do that in minis with the appropriate account size, that would be a $15,000. I'm in no rush. We're doing just fine. So we grow the account. base hits every day, and then as the account grows, we scale appropriately. And that's where the real rubber hits the road, right? You get into minis, and that's where the money flows for sure. Doing the exact same things, nothing different. But you need the appropriate count size to handle stop losses necessary to trade types of commodities. So for me, it's micros until I built up the account appropriate size. Then we start working on one mini, two minis at a time, three, and I do the same thing scaling with minis that I've done. When I added in here for the 10 total, that was the equivalent of one E-mini, and for my account size as a quick scalp, I wanted to unload that as quickly as possible right at this key level because I knew that we might stutter step on the way in. I wanted to lighten the load, and that was a phenomenal place as a single candle, well, kind of a 2-candle scalp, unload some of that. And at the next double top up here was the next natural place for it to either pull back or find some level of rejection. Now, in this particular case, it did actually continue, and the 3 that I shed here, it never broke the 9, but again, when you're in it, you're in it. So I wanted to lighten the load here. This was a good spot to capture some profitability. And then I had 2 running, and having 2 running for the rest of the day was extremely comfortable. Get up, I could walk around. I didn't have to sit here and babysit it. Stops were my stop was in the appropriate place. I knew where my bounce zones and my rejection zones were going to be. So with all of the months of training that I've been doing myself in charting and looking at price action structure, it was ultimately important to me to really put that to the test, and I think I've done that pretty well. So putting on some of my other resistive zones, we'll go through why these are here. What I'm looking at in history is back in history, we'll turn up so we can see this. There's price action in history, and I'll pull back and explain to you why I chose those I did. But these are key levels of prior price action where price either came down or was rejecting off of these areas. And then in between these 2 areas, there was some consolidation where bodies were resting in between them. So I snapped a blue line in between. I snapped a blue line in between that while I was over in the history. And then when I came back to price action, this low right here was actually just done being created. So for me, understanding these areas, being able to chart them and then trust them was the biggest part of my learning curve with respect to charting and utilizing the EWO in an uptrend, in this particular uptrend. So we'll take this area here first, and we'll go back. All right, so here we go. Why did I choose this? Well, I've got support coming out of it here. I also have price action supporting through this area where it broke out, and as it was coming back up, rechecked the bottom of this level, came up to the next level, bounced out of it, broke it, rechecked, pulled. Here's the next zone right here. This is the reason why I'm snapping this one. I've got nice support and rejection criteria coming out of this one. Really nice support bounce here, support bounce here. And we go back even further. Just on the 2-minute chart, this isn't even higher time frame analysis. Price action today. So out of the first zone, this was my first major realization that this was the best bounce out of this area. And as it turns out, when it came back to revisit that zone again over here, it did it twice and then checked the top of it and bounced out again. So I know that this area, not just the line, but the area in and of itself is going to be strong support resistance. Same thing's true with this one here. Most of this price action came from all of these lows here. Got a nice kind of a micro double bottom bounce out of this, but then we have another bounce out of that area, another bounce out of it. We break through, find the lower area, bounce out of that, come back, recheck. It's all of this rechecking of these key levels that really gives these strength. Next area is way up here. Checking in on these consolidatory areas here. I've got nice support out of here, support, 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 all the way through. Rejection out of the midline or the mean of this zone. Rejection off the bottom, rejection off the bottom. Got strong consolidation in this area. Okay. Come in, we get a bit of a bounce off the mean, break through, come back in, check the top, break out. Next zone is up here off of this major double top. This would be a big top for me to be concerned with watching. So I want to make sure that I'm not only looking at the top, but I'm looking at the nearest rejection, which is right here out of that move. I also have rejection, support, rejection, consolidation, consolidation, rejection, rejection, rejection. So these areas, this is how I go about doing my charts. I don't snap just lines. I look at areas of support and resistance that help me tell a better story. So coming back to where we are now, that should make a little bit more sense as to why price action is doing what it's doing in these areas. Why is that important to me? Extremely important to me because I know that in these areas that I'm likely to see some consolidation, and I don't need to be freaked out about it, right? As price comes in and works its way around these zones, I'm very comfortable sitting there watching it do that because I already have a plan that if it breaks and holds below a particular area, then I'm already prepared to either shed or get out of the trade. I don't have to worry about the price action. I don't have to worry about what's happening in here. And I'm doing all of this without an L2, by the way. I'm not using an L2 for any of this. All just support and resistance out of recent structure. So as I come through and I turn these off, explain to you how I'm also using coaches indicators for the EWO process to stay in the trade. All of these support and resistance zones, they're all good and everything like that. But the reality of the situation is EWO training that we are doing, we're looking for price action to stay above the 9. You can see that nearly the entire time, with a couple of exceptions, checking on the 21, getting near to checking on the 55, this has stayed above the 9, the 21, the entire time. This thing could run to the next day of forever and never look back. So again, extremely powerful strategy, the EWO process. Having run this trade live for our membership and being able to talk through the levels and reasons why I look at things the way that I do, where I shed, I shed here because I was a little bit heavy for my comfort zone. So that was more of a scalp shed. I shed at a major level of resistance, which would be a double top where it consolidated for quite some time. And then that's just lightening the load with respect to allowing me to stay now in the trade for the rest of the day without having to worry about or trade my P&L. We had a couple of members that were asking, how are you able to sit through these pullbacks? Well, I've already captured almost $350 in the sheds down here, in the single shed when it broke the 9 to the downside here. I've got one trade, I've got one contract running, and it's zero stress. I'm not concerned about anything at this point. And this one trade now is this one contract based on the action that's happening right now is worth almost $150 micro, which by the way, in Tradeovate, which I am trading through, that one micro cost me $50 in margin to have open. And I think fee structure on that is $1.30 per contract. Well worth it. $50 for $143.75, 30 in fees. Do that all day long. And again, did I shave a little bit too early on some of this stuff? Maybe. But again, I was heavy here. I wanted to lighten the load, and then this double top didn't act as though it was really going to be a double top, but after consolidation and gray candle here, I wanted to lighten that down a little more and allow it to out without having use for me all day, baby. Okay, so the indicators that we have on the chart, Bobby, for your information, this is coaches indicators. You get these with your futures membership, and these things are freaking rock stars as far as I'm concerned. Oh, TikTok. Sure. Uh, well, we'll see if we can get that to continue on. So the indicators that we have here are coaches indicators, and what are they? So the yellow dotted line for me is the strongest indicator on the chart for me right now. The 200 is blue. That is a moving average, moving average, or S. The three up here are going to be EMAs. So these are your exponential moving averages. These are more reactive. The white is the 9, 21 is the violet, and 55 is orange. We also have snapped for us in coaches indicators a trend channel automatically. The bottom side of that is going to be red, the mean is gray, and green is trend channel. And you can see that as price action moves along throughout the day, we actually get nice support and rejection off of the top of the trend channel. It stays relatively tightly within there. If you're scalping, this could be a good way to plan entries as a break and hold of the 9. Offer a nice support bounce. Right here is where I was looking at for support if price action was going to come down. It never quite made it all the way there. But if I were scalping, I would wait for this to then come back above the 9, and I'd look for a volume candle to the upside. I have. So I'm waiting patiently for this to show me. I've got a buyer's wick here. I break the 9 again. This, my entry candle for scalp with my stop down below that low. So what I would be looking for there is then a continuation, and as long as it continued, then I can protect my trade very relatively quickly. And I'll show you. So this would be my entry on this candle here with my stop down below. As price action moves in my direction, I can protect my trade, cover the fees. I don't want to move it up too high. You want to let price action do its thing. But once you've got some space, especially off of this volume candle here, protect your trade and now let the run. So this particular entry on scalp now producing 32 ticks. On micro ES, 32 ticks at $1.25. That's $40. $40 worth of margin, which gets returned back to your account instantly after you complete the trade, and $1.30 in fees. That's a $40 move for $1.30 in fees, and that's a pretty good scalp on a micro. Turn that into, thanks Bruno, turn that into an E-mini, and it's 10 times that. Thank you, Bruno. Appreciate you. So that same scalp in an E-mini turns into $400 and 40. It's just a matter of scale. But you want to make sure that you've got the appropriate amount to be able to handle any kind of stop loss that you have there. Now, the original stop loss that I had planned at that particular location, we were going to take the scalp there. It would be 9 ticks. Well, our ATR on ES at this point in time is 4, so twice the ATR out of the way in case a candle wants to come back down. Challenge, meaning I'm well out of the way of being stopped out, and I've got my finger on the button to make sure I'm watching appropriately. I would never let it hit that anyway. So for a little over $10 in risk, I'm now sitting in a $40 trade. And that risk was mitigated immediately as soon as I got space and volume moved to the upside. Protect the trade. Oh, it's a free trade. I don't have anything to worry about.
Dougie.
Daniel, what's up, my man?
Still waiting on them. No, I guess it's Christmas. They're not getting back to me yet.
I wouldn't expect a response until.
Okay. I just found out that that's TradeEvade actually is Ninja Trader. I didn't know that.
That's correct. And they actually, let me twist your mind a little bit more. Kraken has just bought Ninja Trader, which TradeEvade.
What is the name of it?
Kraken.
Kraken.
Yep. Started out as a crypto exchange.
Wow.
So they're getting into futures now.
Wow.
That should tell you something.
That should tell you something, exactly.
Doug, I just came back in the room. I was curious what this is going your way all day. Was there a place you would add back into it? Like start
No.
new? Okay.
I have done DCAing in the past. I DCA'd down here while it was going in my direction, and that would be the only time I would ever do that. The reason being, my entry was here on this candle. It pulled back, found support off of VWAP. My stop was down here. I was willing to accept the loss if it wasn't going to find support off of VWAP, but because it got such a response off of VWAP, I actually added in here as it broke and then sold off here for a quick 5 scalp, which then lowered because it sold off this lot first. It sold off and dropped my buy point now down to where I bought in the last set of contracts. And I was sitting in a much better position for the overall run. That is the only opportunity that I would consider DCA. That we're coming back or going in my direction, and the price disparity between the two levels was very, very small. Now, if I were to add in, problem with DCAing, and this is a great question, by the way. If I were to add in at any one point in time, it would likely be up here off of this bounce. Put an arrow here for the people out in socials. I would likely, if I were going to be adding in, I'd be adding in on this bounce as a break and hold of the 9. So the actual candle that I would be adding into would be right here. I wouldn't mess with the consolidation. I'd want to wait for a break and hold of the 9, just like a scalp for my add in. Now, the problem with that is you add in there, depending on how much you add in, that's 89 ticks between the two. So it's now going to dollar cost average you. It's now going to dollar cost average you up here. Now your overall position has been moved up considerably. The other problem with that is if I were to sell off or shed, say there was a pullback here, or actually probably right here would be the better shed. If I were to shed up here, now my buy position, because it's FIFO, LIFO, or FIFO, which is first in, first out, it would sell this one off first. And now my buy position moves up here. So DCAing into a long running trade like this, you've got that much of a gap and your account is under FIFO conditions. Not great. I prefer just to let it run and do its thing.
Okay, I appreciate it. Thank you.
Does that make sense?
Yes, it does. Thank you.
So if I had a buy position up here and I shed here and it moved me all the way up here, I would then have to move my stop to protect my trade again. And now I'm super close to price action where now I really have to watch more. The point of me shedding where I did was to lighten the load and take the pressure off the overall trade and just let it run today. Now, as my account grows, I can do that with more contracts. It becomes a little bit easier to manage that because then it's a relative size of the overall account. I'm not over leveraging him overly about making sure that I've got enough in the account or anything. I don't typically add in when it's this much space. When we're close to price action and I can get a good result out of it, I'll add in there. So on a nice push or a break of the previous day high, you could add in here quite comfortably because it's relatively close to your buy position and your DCA would then be only moved up here just under previous day high, which once it breaks it, it never really came back down to test it again, but the likelihood that it could come down and retest that area with support off one was pretty high at that point. So once I shed the first 5 contracts, I was just going to let the rest of it run. Got up to this double top, I shed 3, and then I had 2 that were running for quite some time. Shed 1 here when it broke and held below the 21. Did it again, but at that point I was with 1 contract and my stop was way down here below this low. So well protected for my buy position and my stop, so that even if it were a knife drop, it would have to be one heck of a market drop in order. And the whole point of letting the runners run at this point is to not keep your stop too close. You want to manage the trade yourself, but you don't want to get stopped out because just like it's doing, this has been running since it was 10:18. Now 4 hours and some odd minutes.
What will you do once you get closer to the bell? Like, are you going to start moving that stop up? Are you going to keep the position?
I could keep the position if I've got enough margin in the account to do so. The CME margin rate for this, I think, was $100 I said earlier, which I have in the account to hold it overnight or hold it through the 1 hour break. Will I do it?
So what
I don't
happens
know.
if you don't?
I haven't decided yet. If you don't,
What happens if
Topher,
you don't have the margin?
good question. So if you don't have enough margin, I'll be with you here in just a minute on TikTok. I'll take. If you don't have enough margin in the account to hold it overnight based on your broker's requirements, whatever broker you're using. For me, Trade of 8 day margins are $50 on a micro ES, and we're still subject to the CME group maintenance margin of about 20. Call it 2,300. If you don't have that margin in your account and they liquidate the trade for you, there's likely going to be a fee for that because now they're managing your trade instead of you, and you don't want to do that. Ideally, what you would like to have is either the margin in there or when you get close to power hour. I can see that we're starting to get some pulls and we're here again. When we get closer to power hour, we might see an actual market pull. We're getting a lot of dojis here now at the top of this run. Things are really starting to slow down as far as volume goes. ATR is 5. I'd probably just close the trade and call it good, to be honest with you. but I haven't gotten there yet. So I do have the margin in the account to do it. See when we get there. Likely what will happen in power hours, we might experience a pretty hard pull because this has been running
So,
all day.
so let me give you a scenario. So let's say I have my, I don't know, I have my stop loss in like you have, right?
Mhm.
But I don't have my margin, okay? And it's up, however it's up, okay? And it closes, the bell closes or whatever. I
Mhm.
don't have the margin. It's up. I have my stop up. Obviously, they're gonna take a fee. Are they gonna sell it at that market close
Yeah, they're gonna market sell you out of that, which more times than not is not going to
automatically?
be the
Okay,
best for you. Um,
and then plus
it's
a fee.
it's better than you do, or it's better that you close your trade than them. Excuse me.
Gotcha.
Uh, um, but again, if you don't have the margin in there, they're going to liquidate the trade for you. Typically, they'll close that.
But they're gonna respect the stop, right? Like it's not gonna.
No, the stop will go away too. They'll flatten the whole thing. So they'll close you. So for instance, where if price were right here at 69.6025, it'll be within whatever the spread is at the time for the market sell. So it'll be close to this price. They're not going to sell you at wherever your stop.
Okay, and so if I were to sell it, it would just be like whatever it is, and the fee just wouldn't be there.
Yeah, so if they liquidate the trade for you, some brokers charge you between $35 and $50 to close a trade, liquidate a trade.
Oh, oh, damn. Okay, okay,
You don't want that.
and that could definitely kill your profit. Okay, definitely
Oh yeah,
for sure.
you bet. Definitely do not want that. Bobby, that box is the volume indicator, Coach's 3.1 volume indicator. One of three indicators that we get with our future membership. The bottom is the EWO, and with Coach's indicators, you get a table that you can use to track 6-star, track the tickers or commodities that you like to watch, and it gives you a star evaluation of what is happening with that trade. If you hover over it, it shows you what each star means. When you hear Coach on the live saying, "Congratulations, your trade," this is how we're making that evaluation. The EWO in this particular case is green. Candle broke and held above VWAP. Candle broke and held above the MA. Green super trend. I don't have on my chart currently. 21 EMA is above the 55, and we've made a new high of day. New high of day is R. So if this were a short, be in the opposite direction. UO is red, broke below VWAP, below the MA, which is 100, red super trend, and 21 beneath the 55. What we're really looking for here in a strong EWO is we've got our indicators stacked. So 9, 21, 55, 200, and VWAP in that order. Shows us, and the fanning of the indicators shows even more strength. Over here, when we were making this really nice move to the upside, you could see that the 21 and the 55 were really developing. As these more reactive 9 and 21 get some space in between them as well, that really shows you where the 9 is more separated from the 21. That's volume move. So that's where we're getting these great big volumetric moves or parabolic moves. That's where you get the space in between the 9 and the 21 where we start looking for confluences in strength is the cross of the 9 of the 21, the cross of the 9 of the 55, then the 9 crosses VWAP and the 200. This is a map. It's got volume, it's got pace, it's got everything you want for scalp. And if you got in on the EWO here, which was another EWO that this one did, this would have been a challenging one to sit through depending on where you got in on this candle. But we did find support off the 200 in VWAP, and that overall move there, again, depending on where you got in, could have been a 45 tick move, depending on the number of contracts. Could have been a $50 trade on one. So again, a really nice scalp trade there with a break and hold of the 9 or the EWO entry as your. Yeah, that's we get the $8 box. The way I've got mine set up, we're really concerned about what it's doing. It's done this a couple of times where it gets flat and then a little volume and pops back up, but we are getting late in the day, so expect some level of retracement at some point for this afternoon. Here, the volume indicator. The way that the volume indicator works is it will show us the volume, not only total volume, but it also give us buying volume and the selling volume. I have these set up so that when the selling volume is actually in control, the colors will change. Whatever color is next to blue, total volume is whoever's in control of that particular candle at that time. Pretty handy tool. All right, everyone over on TikTok, please, please, please come on in and hashtag FYP and let's get those taps going, please. Hashtag FYP. You get that? Well, it's not with Tradeovate. To fully answer your question, this is coaches, but I am trading into my Tradeovate account. And right now, what we're ADT and Coach have a deal running with Tradeify. If you guys are interested in prop firms, Coach is an affiliate with Tradeify. You can see at the top of your screen code ADT. If you go to tradeify.co and use code ADT, you'll get a pretty hefty discount off of your Lightning funded accounts. That's for Lightning funded accounts only, which are the instant funded types of accounts. Question? RYJW, I promised you a look at NVIDIA. Take a peek. Okay, so by the time you were asking, yes, that was at a double top there, and you've got a rejection off that. Now, what I'd be careful of here is you are now squarely sitting on a double bottom type scenario, which is also supported by wick tops here and tops. So a fair amount of structure here that's going to try and hold this up. Not to put too fine a point on it, but if you're looking for a short, now would not be the greatest time to do that. Why is that? Because one, we're in an uptrend. Taking a short in an uptrend down to support or into a support area is not good.
Yeah, man, TikTok is just not liking you, man.
Okay, well, we'll have to figure what. So we'll YouTube it for all of you folks out there. If you got questions, please keep them coming. Bobby, great questions on engagement. With respect to what price action, TradingView lacks the price action compared to trade. In what respect? If you can elaborate for me. If you're talking about overall candle movement, I would agree to a point. So I might be talking about candle responsiveness or how candle breathes or moves would be correct. And if I were to show you TradeVate account, you plays. Okay, there it goes. So if you're talking about overall price action in respect to how the candles breathe back and forth, yes, the broker will have a more real time candle movement. Yeah, you'll be able to see it breathe high volume time. You'll see it bounce up and down a little more aggressively. Whereas in TradingView, you have more of a sticky movement. So it will bounce up, bounce down, bounce up, bounce down. But I have TradeVate open on my screen, on another screen, while I'm in TradingView. The reason why I do that is I like managing my TradingView with respect to using coaches indicators because they're just a phenomenal tool. When we're running the EWO process, I cannot get a decent EWO, a decent oscillator in TradeVate. I haven't traded through NinjaTrader. I know they did have an account there and they merged the two. I've never traded over there. I understand that they have better tools than TradeVate does. Back to indicator, whatnot. Also run custom prime scripts over in NinjaTrader that you cannot do in TradeVate. But the overall gist of it is I'm fine with using TradeVate or prop. Tradeify allows us to trade in TradeVate, and we've got several members, including moderators, that are now using TradeVate and trading through TradingView simply because we can use coaches indicators. You are correct. Candle movement. The same is true with Webull too for our folks that use Webull versus in TradingView. The candle movement in TradingView is a little sticky, admittedly. And in Webull, you can get this really beautiful moving candle up and down. I mean, they really do a nice job in there. And the platform itself is decent. I like it for what it is. Webull. And over here in Webull, I can all the kind of charting that I do in TradingView to a point. TradingView really is the better charting platform, but I can over here support and resistance out of an area. Not that where I'm looking for price action. I don't think you can move this. There you go. Sorry about that. So while I'm over here in Webull, I can do charting over here quite easily. I can snap lines. I have hot buttons that I for that, right? Change the thickness. I can change the color if I want. Where it is I want. So it's really a nice platform with respect to being able to get in there and do some charting. The thing I like about Webull is the quotes widget and the futures widget. It allows me to really hone in on what contracts. We don't have to worry about contract switches in Weevil so much. I'm looking at Micro Gold. They use a platform, or they use what's as a main, and in that case, if you do all of your charting in the main, as the contracts switch in and out and get pushed up into that main designator, you don't lose any of your charting. Whereas on some brokers, if you're charting specifically on their contract and move to the next contract, you charting values, charting line, unless they've got continuous contract switching, which from what I've seen, they do. But over here in Weeble, I really do like the quotes widget. It gives me all of the information I need, and it tells me what my actual fee structure is here in the trade widget. See that a micro ES is going to be $1.48 in fees, whereas the intraday margin would be 120 cents. Well, Tradeovate margin is $50, and based on my fee structure, because I'm a lifetime member, my fee structure indices is now 30. So I've got cheaper 23 hours a day margin rates and cheaper fees through Tradeovate, and being able to use coaches indicators is an absolute thing. I prefer Trading View, manage the trade, and I keep Tradeovate open on just to make sure you can. I don't know if you know this, Bobby, but you can link Tradeovate. If you were a futures member, being able to use coaches indicators is quite literally a blessing as far as I'm concerned. I really do like the structure. I like the opportunity to customize. I can come in here and I can put in session times. If I want to look at New York session, London session, open highs, lows, all of that kind of stuff, I can do that. Populate London session, and you can see it happen at the London area. Validation. Right? So if you use these session highs and lows and support and resistance, folks do, coaches indicators do 4.0 version of it, and will actually snap those lines for you. That's pretty cool. We also have pre-market high, low, close, previous day high, low, close, market low, market high. Lots of different customizations that we can do with this. Basically, a dozen or so indicators all wrapped. Good. I really do enjoy it. And I haven't had, other than the sticky candles, which I completely understand. You're scalping, that matters, it does. But when you're running an EWO, it really doesn't matter at all, because all you're managing now is where's the candle relation to, or where's the candle forming in relation to the EM. Good. Do we have any questions over in the Zoom? Got a couple minutes. Have to. All right, so I'm still in this trade, and I'm going to remain in this trade while I go do my other things. I'm going to move my stop up to the next level of support, which is here. Want to avoid being too close to this in case down and recheck that and then bounce again. So I'll keep it just under that area. If it comes down all the way here, that would mean a break of this trend line and a break of the 55 and a break of this low. There's three things right there that would tell me that I should probably start exiting the trade. There was not a bounce at this 4 hour here. So this being where it is, I'm really comfortable with that position, and I can let that ride All right, Bob. Thanks for your questions. I really appreciate the engagement. Let's not forget, we've got Dawn coming up at 4 o'clock with the aftermarket show. Always great information and entertainment there for our ADT members and folks on the YouTube live. Please join us over there for some education, hangout, kinds of good stuff. Again, that's Dawn at 4 o'clock for the aftermarket show. Thanks very much for joining us today. I appreciate it. And I apologize for the short day today, but we will be back on Friday with a full 2-hour show from 2 to 4. Join us then. Thank you.